don't let that turn into a loss. Okay, it's important. All right. Okay, so first trade, 3 ticks. I'll keep this up. Let me go back to the 5-minute chart here and take a look here what exists. Okay, right there. And you see, I mentioned to you in the first few minutes of our webinar this morning that there's usually a big swing as the day begins, and you see it every time the market opens up. It's a battle. So you see this, and then you see this. This is very difficult to hold on to, especially if you have small losses or small stop. Nobody wants to risk a lot of money. It's difficult when you have these large swings. So just be careful first 5-10 minutes because of the buyers and the sellers jockeying for position. Okay, everybody okay with that? Any questions so far? Let me add this here, always on top. All right, leave that like that. Now, Scott says, how many of these 3-tick trades do you typically take each day? You know, Scott, I'm more of a 5-minute chart trader. So scalping is something that I teach. There's actually 2 scalping methods that I recommend that I teach. One is a counter trend method, the price action scalping method. The other is the trade scalper. So there's 2 scalping strategies that I teach. And I think that if you're going to be a scalper, you have to do obviously a lot of trades multiple times throughout the day. As I've evolved a little bit here as a trader, I really prefer, personality-wise, to be on a 5-minute chart and take less trades, maybe 2, 3, and then shut it down. Now, a lot of people love to scalp, and the scalping method that I teach works. It's not perfect, and I have to say nothing is 100%, but you're able to take a few 3-tick trades throughout the day, let's say 5, 6, and then I would also recommend shutting it down, taking it down. I would not recommend 24 hours a day just scalping, because eventually it's going to come back at you. You're going to get a few losses, and then you're going to give it back. So regardless if it's scalping or what I prefer, trading on a 5-minute chart, I think less sometimes is more, and especially if you try to trade into the afternoon, you're going to give it all back. So I don't recommend, let's say on the scalper, Scott, I would say 5, 6 times a day. If you're up for the day, I would stop. And the later in the day that you continue to trade, or into the afternoon or the afternoon session, depending on where you are in the world, right? I think you have a harder chance to make the trades successful. So 5, 6 times, Scott, reasonably, and on a 5-minute chart, I would say 3, 4 times, and you're going for larger profit as well. So you see here, I'm considering taking 3 ticks, sometimes 2. Here it's 5 ticks at the moment. Now, news is very important, and if there is news, we're going to hold off. It's not worth trading right in front of a news event, okay? And I also have to say, a lot of people want to jump into this with 5, 10 contracts all at once. You have to work up to it. I really believe that psychologically, if you start off with large numbers right away without maybe the practice or the experience or even testing whatever method or system you're using, sometimes psychologically it's going to get the best of you. You're going to see you lose or make money when it's ticking up, ticking down, ticking up, ticking down. And so I think that it would be prudent to start off with 1 contract and then work your way up to 2, and then stay at 2 contracts and then work your way up to 3, and then stay. And you're actually gaining confidence and knowing that if you have a loss, you're able to recover, and then after you recover, you can then get ahead. So I do recommend when you begin trading for the new traders, don't just jump in. Start off with 1, and you have to be consistent. And if you can be consistent with 1, you go to 2 and 3 and so on. Yes, great question. Jason says here, if you slowly add contracts as your account accumulates, is there a limit other than psychologically? Okay, so everybody wants to trade 100 or 50 because the math makes, you see a lot of zeros, right, at the end of the day. But it's not that the same way when you try to get filled on larger number of contracts, Jason. So if you take a look here and you see here 200, 600, 700, okay. So these are potential contracts that are trying to get filled, and these are potential contracts that are trying to get filled. The value here in the middle is actually what is fulfilling, okay, what is actually happening. So what I want to do is I want to do 50 contracts. When it hits this price or this price or this price, you may not get filled on your 50. Only 1 or 2 or 10 out of your 50 may get filled, and that's called a partial fill. And so what happens is the market hits your partial fill. Oh, what happened here? I wasn't paying attention. Here's a long trade, 23.6150. What time is it? 9:50. 9:50? Okay. So I wasn't paying attention here, but let me just go in here. We'll do 3.
Order filled.
Okay. So what you're seeing is that the numbers here, they're not accurate. They're not accurate to you trying to get the number that you want, and then all of a sudden you get 3 out of your 20 or 2 out of your 5. There's a lot of partial fills unless you go in at market. So the problem is the partial fills when you enter using a limit order or when you exit using a limit order, you're not going to get filled completely. That's really the largest issue with heavy numbers unless you use market orders, Jason. So I would say on a typical day, you can get filled between 10 and 15 without any major issues. The more you go above 15, 20, 25, I think you're going to have a larger problem attempting to get all of your contracts filled when it hits your price. So that would be my problem, the partial fills, especially on the exits, right? I have a limit order, and also speaking on phantom orders, I've spoken about this over the years. I haven't discussed this in a while, so let me just go over what phantom orders are all about. So you see these numbers here, and you try to understand 750, well, that's pretty good resistance, or 850, that's pretty good resistance. But the reality is it's very easy to take on, take off, cancel your orders. So electronically, especially with robots doing this, you can realize that the numbers disappear as soon as it gets close to these values. So the 700 may not actually be realistically 700 contracts that want to get filled. As soon as it gets close, sometimes you see it drop down to 400 or 300. It's because they're constantly moving them up and down and up and down. So you can't consider these values that you're seeing here legitimate numbers that are going to be filled when that price gets hit. Instead, you have to say, currently you see 1200 here, but it may change within a second. It disappears, and those are called phantom orders. They're luring a lot of people to see support or resistance, and then
Target
they're removed.
filled.